Hello, traders. It is Tuesday, the 15th of October, halfway through the month already. 15th of October, 2019. It's 8:01 a.m. Chicago time. This is episode number 1617, 1617 episodes so far. Not too bad, right? I want to remind everyone that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on sentiment, the cable is leading the pack. The British pound is up quite a bit, about 0.7% from yesterday's settlement on the futures. Euro stocks follow suit with the DAX, and then the U.S. indices. The U.S. indices are opening higher from yesterday. And I did mention yesterday that it's a bank holiday, and boy, was it really reflected in the trade. A real holiday trade yesterday. Very little range. The ES is at was at 50% of the expected volume of 1.1 million. It had about 540,000 for the session. Really a good day to do some homework, clean some things up, catch up, relabel your DVD collection or whatever. Anything but put on a trade, really. So I didn't execute a single trade yesterday. Plus, I'm working on some big projects that have been really compressing my time. But I'm glad I didn't trade. This is the kind of action that would have gotten me in trouble. So that's where we stand this morning in terms of sentiment. The crude is off 15 cents on a November contract. That's 0.28% from yesterday's settlement. In terms of the theme of today's action, the theme today is that the path towards a Brexit deal might be opening up, but latest proposal from UK still face some headwinds. EU leaders might need an additional summit before end of October to secure a Brexit deal. Also, the German October zoo survey is mixed. Current situation hits a fresh 9-year low as expectation. Survey beats. Just now, the IMF reduced the global GDP from 3.2 to 3.0. And then we also have these wonderful trade war things going on. So that's really the theme. That's really the theme of today as we come in. The action overnight is seems a little fidgety, but overall the market wants to push higher. Looking at the big headlines, it is earnings season. We did get some major releases. As you probably saw, the financials were higher yesterday, much higher than everything else. The financials finished up 58 basis points higher from the open versus the other underlying sectors in the S&P 500. JPM reported 2.68 versus $2.44 higher revenues. And then Goldman Sachs reported worse at 479 versus 503 on lower revenues. That's a bit of a surprise. And then Citibank reported $1.97 versus 196. Citigroup revenues are in line at $18.6 billion. And then Wells Fargo also reported $1.27 X items versus $1.15 on a slightly higher revenue. So that's where we stand at 5 o'clock this morning. We got a move, and I'll show you what that looks like here. We got a move that caused the markets to drop a bit. I'm going to shift you over to our to CT Bookmap Pro to look at the action on the heat map and the order flow. This event here was connected with China reportedly wants U.S. to remove tariffs to hit a $50 billion in agriculture import offer per the phased trade agreement announced on Friday. So they want these tariffs removed as a condition of buying those ag products that the president has been celebrating and advertising on his Twitter. So that caused a drop. The market has recovered a little bit, but overall it's been sideways since that action. Let's take a look at what was expected yesterday versus what we got. This is going to be a very, very short segment because you know what, the with the holiday and stuff, it is just not worth spending much time on the action that we got yesterday. So the primary scenario, the expectation was for a push back into the range early on, and then for it to drop out of range and just go sideways, potentially test into the prior to into Thursday's range. None of that happened. Really, there's no point in doing a review. Here's what actually happened. I'll show you it on the trigger chart. Yep, it's a one big zipper. So what we had yesterday is complete balance. Look at how this profile looks. Let's clean this screen up. Look at that profile. This is a pretty awesome distribution. It has some pretty high kurtosis a little bit, but the volume overall was pretty lousy, 540,000, and the market was completely balanced. I mean, we finished basically where we opened, and we have an even distribution with a very, very tight value area. Now, under normal circumstances, and this is partially due, let me expand the range here because this looks awful. Under normal circumstances, we would look at this as really excessive coiling, which would set us up for when we have a lot of balance and excessive coiling. What does that set us up for? Let's see who knows. As always, unfortunately, I cannot wait for your answers. That would be a 15-second delay, and that would be boring as heck to just sit there for 15 seconds. But when we have balance, we have a lot of coiling like this, we expect imbalance. The market goes from balance, okay, so you get an even distribution, to imbalance, and we get a very thin distribution, to balance, to imbalance, and so on. That's the market cycle. And so today, we expect this to tip one way or the other, except that volume was not all that great yesterday. I can almost wipe out today's action without much consequence in terms of the context. I mean, yesterday's action. So that's where we stand on yesterday's review. Looking at the Übernacht, the overnight session, we have a little poke up. The market is looking like it wants to skew higher from the open. We open up and test lower by just a little bit, and since then we've kind of held the mid here and run up. We have what is a triple top on the 15 minute right to the tick. We have what is a bona fide week high before the sell-off on the China news, but even the sell-off on the China news did not breach yesterday's IB high and has held up above. And if you look at the profile, what we have in a profile here is something that can only be described as fugly, or the kind of profile only its mother will like or think is pretty. It is just a very, very blunt profile on okay volume, $205,000, 205,000 contracts traded. And so overall, it's just this could have been a Christmas Eve or something yesterday. Again, yesterday I believe it was Thanksgiving Day in Canada, and also a bank holiday here in the US. So you could see the effect that banks have on the markets. But overall, the skew today to the up is to the upside. Both price and delta show that the overall overnight inventory is long. Here's the big picture. So we've moved from August balance to September balance to here's where we are in October, and we have punched up and into that point of control. Remember, I talked about that point of control Monday morning, Friday morning, talking about that being a key target. And then above there, the next high volume node is the 3000 with 29.9150 being an important dividing line. That's still in play. So as we trade here at 29.76, keep in mind that's 15 points away, well within today's reach. Keep in mind that 29.91 again. The last time we were up here, the high was 29.94. So overall, we've punched back into September's balance and we're working September's balance and we are likely to push higher. We're likely to continue squeezing higher as I talked about on Montag on Monday. Okay, so let's take an overview of the order flow overnight. Where's my order flow? Here we go. The order flow overnight. What do we have above and below? Here's what things look like. Full depth. 29.6550 has been well bid. It is just below the prior day's close. It is today's open, overnight session open. Above us, the overnight high is well offered, but it's been well offered since yesterday. You could see parts of yesterday there that there's some pretty good offers there. These are likely to trade out, and we have multiple tops up here. We are likely to push in here. That liquidity is likely to attract price to it. That liquidity exists between 29.82 with 82.50 being the overnight high all the way up to 29.86. There's plenty here to push against, and as we push against it, it's likely to push a little bit, but it's likely to give us an opportunity to get short for around 3.5, 4 points or one rotation at least once we get up there. So depending on the action, unless we have an open drive higher, open test down, drive higher, I'm likely to look for short in this region here, but I'm not going to do it in front of a triple top. That would not be wise. Triple tops have a low probability of holding through to the end of the day, the end of the session. So I'm going to let it poke through and I'm going to look for an excess high there into this liquidity, look for a short to return back into the 29.78, 77 area where this kind of balance has been. So that's what things look like in terms of order flow. Let's take a look at how things look like in terms of our plans for today. So let's switch. My software is not working correctly, so I'm having to use this kind of clunky tool to switch scenes. Here's what's expected. Look at how tiny yesterday's range is. Again, the gray areas that you see here look like noise, but these are stock zone areas. These are the areas that I expect the market to respond or to have a reaction. Those are the areas that I'm looking for structured trades to engage in. We're opening above the prior range, so we're opening out of range. I don't know what kind of an auction is likely to take place, but I'm expecting, because we are in Friday's range, I'm expecting an open auction that is likely to respond a little bit towards 29.73, but I'm looking for a push into 29.80 and then a drift up into the overnight high. I expect it to battle here quite a bit. Remember, there's a lot of liquidity up here between 83 or 82 and 85 or 83 and 86. I forget where. Let me look. It's 82 to 86. There's a lot of liquidity here, and I expect it to balance out. Why? Because this is a very clear point of control from Friday. And there's a lot of liquidity here. I'm expecting that to squeeze and balance out, small rotation bounce, and then I expect it to push through and get us into this 29.88 before the market shifts down. So the primary scenario is expected to be responsive initially, and then I'm looking for an initiative type action on the way up, an impulse up that gets tangled in this 29.82, 83, 84 area for a bit before we break higher and through the overnight high. That's the primary scenario. The secondary scenario is one that resolves upwards. Again, an open auction for the same reasons. It resolves upwards, pushes immediately into this high liquidity area, pokes through the overnight high, holds, and then shifts down, consolidates a little bit lower, and then starts to check the 29.72 half, 29.73, and potentially getting down into yesterday's point of control at 68 before the bounce. Again, this is not a path that I hope the market will go in. This doesn't color my bias. It doesn't do anything like that to draw these lines or to draw scenarios that I think the market will play. What it does, though, is if I see it playing, it tells me, and this is the hard part for most traders, and I've been exposed to probably thousands of traders at this point. The hardest part for most people is not determining the bias and clicking to put on the trade. It is hanging on. And what these patterns tell us is what areas are we expecting to be challenged or to see a challenge so we can scale out, and what do we expect the market to do if it continues, and so on and so forth. This is just kind of our drawing lines on a map of a battlefield, movement of troops, movement of resources, that sort of stuff. But we don't know what's going to happen. We're not rigidly holding on to these lines. Okay, that's what we've got. If you're a Convergent member, don't forget we have our trade talk today. And that'll start at 1 p.m. Eastern. I'll catch you in there with questions, and we'll go over what the market has done at that point to see how the market's likely to close. Good luck today. I'll catch you tomorrow morning. Take care.